It's been a crazy few weeks for SoFi. In the past month, the stock has dropped over 20%, then rallied back 20% again, and has been steadily creeping back up in the past few days. But macroeconomic factors are playing a major role. Could we get a cut to rates that would boost SoFi stock very soon? And what is the outlook for the rest of 2025? Some analysts saying that the stock is massively undervalued at the current price, while others are cutting their ratings. SoFi as a company has shown incredible growth quarter after quarter, year after year, and we've finally seen that reflected in the share price towards the end of 2024. But now, market conditions, Donald Trump's tariffs, and a fear of global recession has seen most stocks nosedive. Before we get into the video, if you find any value in this, can I ask you to smash the like button? Literally costs nothing, but it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals and offers variable and fixed rate parent, personal, and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. Now, I see so many people commenting on SoFi, calling the company a startup and treating this like a company that was just founded. But SoFi was founded more than a decade ago in 2011, and a lot of people seem to be thinking that this company has only really existed since going public less than 4 years ago. But the fact is that this company was a decade old before it was listed on Nasdaq. It's still a growth company with huge potential and still at the very early stages and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very, very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. Then there is the fact that fintech is projected to become a $1.5 trillion industry by 2030. The fintech sector currently holds a 2% share of the $12.5 trillion global financial services revenue. It's estimated to grow up to 7%, of which banking fintechs are expected to constitute almost 25% of all banking valuations worldwide by 2030. In 2022, fintechs on average lost more than half of their market value, but according to the research, this plunge should be considered a short-term correction in an otherwise long-term positive trajectory. When we look at the latest investors' presentation, this presents a very different picture of the company than what Wall Street have tried to show us over the past 18 months. In fact, this is a company that is doing extremely well with regards to almost every sector of the business. New member additions has increased every single quarter since the company first went public. And so too has new product additions, which is increasing at a rate of 31% year over year, but also had its largest ever quarterly increase in the most recent quarter. And if you consider the effect of year over year compound growth, you will see that in just the last quarter alone, there is an increase of over 1 million, which is close to the entire full year 2020 growth rate. So in real terms, the company is now growing per quarter what it used to grow in an entire year. But now this is very important. They have a lot of new members, but they also have a lot of products that they provide to their members, which gives SoFi the opportunity to cross-sell its products, which has so many benefits. Like they can cross-sell products to existing customers, which means that they achieve additional revenue without spending a cent in additional costs. Think of this from a financial point of view in very simple terms. Revenue goes up while costs come down. This is exactly what you want to see in any type of business, not just in banking, not just in SoFi. Any business that can increase revenue while decreasing costs is onto a winner. This is why lending and financial service products are all up too. The company has posted by far their best returns to date, and it's very likely that this is going to get more impressive each quarter. As the financial services productivity loop continues to create marketing efficiencies, as we can see here with the huge increases each year, we can see the huge growth in financial services and tech platform that now accounts for near 50% of revenue, up from only 24% in 2021, which further demonstrates SoFi's position as a top fintech company. On the financial side, things are just as impressive, with the quarterly adjusted net revenue increasing each year and having just recorded by far their biggest quarterly increase. But just look at the adjusted EBITDA, where there is an incredible improvement, which has seen SoFi turn into a profitable company for the first time. So when we look at SoFi's guidance, we can see that management expect to deliver between 3,200 and 3,275 in 2025, adjusted EBITDA of between 845 and 865, and net income between 285 and 305, with EPS between 25 and 27 cents. Now for Q1, they expect net revenue of between 725 and 745, while they are guiding for EPS of only 3 cents. So this tells me a few things. First of all, SoFi's revenues and EPS are going to increase drastically as the year goes on. If they were to achieve EPS of only 3 cents in Q1, that would mean that they will achieve an average of at least 7 to 8 cents per quarter for the rest of the year. On Friday, William Blair analyst Andrew Jeffrey has forecast the company's earnings to be just 3 cents for this quarter. In my opinion, this is setting up SoFi perfectly for a double beat on earnings later this month. Another boost for SoFi would come if the Fed was to cut interest rates. Now, in Jay Powell's latest speech, he chose not to promise more interest rate cuts. However, with this decision, it seems likely that he could be fired by Donald Trump. And after Christine Lagarde of the European Central Bank decided to cut interest rates again this week, which is now the 7th time in a year, I feel there is more pressure than ever on the Fed to cut rates. Importantly, it is now widely expected that there will be at least another 3 interest rate cuts in Europe over the next 3 months. If the Fed follows suit, then this will boost SoFi significantly. Over the past year, I've been extremely accurate with my SoFi earnings predictions, and SoFi have scheduled their Q1 earnings report for Tuesday, April 29th. So guys, if you want to see an earnings preview in the next few days, then let me know in the comments below. As soon as this video hits 500 likes, I will start working on that earnings preview. This is not one you want to miss out on, so smash the like button and comment down below. So is SoFi a millionaire maker stock? And this is one of the most important questions of 2025. Because as we've seen, the stock has dropped almost 40% since January high, but there are valid reasons to buy the stock. Although macro headwinds might impede SoFi's earning potential in the near term, it's still easy to be bullish on the bottom line over the next few years. CEO Anthony Noto has high hopes for the company's future, but does this fintech stock have millionaire maker potential? Anthony Noto wants SoFi to become a top 10 financial institution, and that is seriously big thinking when you look at the size of some of these when compared to SoFi. For example, SoFi is valued at just $12 billion, while JP Morgan stock is valued at a whopping $645 billion. That is an incredible 50 times bigger than SoFi, so there is huge scope for growth. And it is SoFi's growth trajectory that certainly gives investors confidence. The customer base has expanded tenfold in the past 5 years to 10.1 million. This has resulted in rapid revenue gains as well, driven by a wide range of offerings. Now, as I've said so many times before, this provides a huge opportunity to cross-sell customers on new products over time, which is not only lucrative for SoFi right now, but the more they expand, the greater this opportunity gets, and I feel a lot of people are missing out on that point. But SoFi is also finding ways to make more money at a lower risk. In my last video 2 weeks ago, I talked about the $5 billion agreement with Blue Owl Capital Funds. And now SoFi has secured a $3.2 billion expansion to its loan platform business across agreements with Fortress and Edge Focus. This extension builds on the original $2 billion agreement between SoFi and Fortress from October 2024, and now an additional $1.2 billion in loans in a joint venture between Fortress and Edge Focus. Anthony Noto stated that the additional $3.2 billion commitment helps us better meet borrower demand for personal loans while moving SoFi towards less capital intensive, and more fee-based sources of revenue. We're building strong momentum for the loan platform business in 2025 and beyond. So this is a great development to further boost SoFi's growth at low risk. In terms of profitability, last year was a milestone for SoFi as it registered its first full year of net income. JP Morgan Chase is widely viewed as the highest quality bank. Last year, it reported a net profit margin of 32% compared to 18.7% for SoFi. Now, should the US enter into a full-blown recession, then the likes of SoFi stock will be hurt more than JP Morgan. But as I looked at in my last video, Anthony Noto and the SoFi team have been preparing in case of an economic slowdown. If you haven't seen this video, then check it out. I'll put a link to this in the description below. So what do analysts think of SoFi stock? Looking at MarketBeat, we can see that the consensus price target across 16 analysts is $12.50, with a high forecast of 20 and a low forecast of just 3. Now, this is set by 16 separate analysts who have issued 4 sell ratings, 6 hold ratings, and 6 buy ratings. So as you can see, that Wall Street's opinion of SoFi is varied. The latest of these is going back 2 months when DBS Bank issued a strong buy rating, while Citigroup, Needham, USB, and Goldman Sachs have all increased their price targets this year. Of course, the latest analyst outlook on SoFi stock was from William Blair analysts, Andrew Jeffries, who lowered his expectations before earnings but has not given a price target. But just take a look at Fintel. We can see a very clear picture. SoFi isn't just being rated as a buy. Institutions have been loading up on this stock for more than 2 years. Institutional ownership has nearly doubled since early 2023. It's always wise to keep an eye on what big money is doing, and institutions have clearly not been cutting down on their SoFi investment. SoFi's disruptive and innovative financial services platform, not to mention the valuation for SoFi, is not extreme, with shares trading now at a price to sales ratio of just 4.5. So if you have strong conviction that SoFi still has a long runway ahead of it to grow its revenue and customer base while also increasing its earnings just as management believes they will, then today's prices could be seen as an absolute bargain. And this is what I consider to be very interesting because SoFi's growth is showing no signs of slowing down. And SoFi could be set for a record growth of its lending and financial services products and therefore the best quarter revenue to date. But guys, what do you think? Is SoFi still a solid investment now in 2025 with the stock down 40% since January? Remember that SoFi stock also dropped significantly in Q1 last year before bouncing back stronger than ever late in the year. Let me know your thoughts in the comments below and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on X and I'll catch you in the next video.